In terms of the domestic equity market, we saw the SPI rise around 74 points to 10,793 last week, while the S&P SL20 rose 56 points to 3,103. Despite the rise in the index last week, total market turnover declined to 3.6 billion rupees, falling 26% compared to the previous week. However, on Friday, turnover rose to a weekly high of 1.1 billion rupees, reflecting an improvement in investor sentiment ahead of the IMF review for the second tranche this week. Cal believes there will be some positivity in the market this week due to the IMF review, the $200 million ADB loan, and the elevated remittances. From an interest rate perspective, we saw the average weighted prime lending rate, the AWPLR, drop to 12.79% last week. This was the first time it had fallen below 13% since April 2022. Sri Lanka also saw its November remittances increase 40% year over year to $537 million, supported by an improved exchange rate. Moving on to treasury auctions, last week the government raised 185 billion rupees through a T-bill auction, predominantly through the short-term 3 and 6 month bills, which saw an interest rate decline of 19 and 14 basis points respectively, while the 12-month bill remained unchanged. Additionally, this week the government will try and raise 220 billion rupees through T-bills and 160 billion rupees through a T-bond auction. In terms of global markets, positive US wage and labor market data helped US indexes rise on a weekly basis. Furthermore, the Fed's last monetary policy meeting for 2023 is set up for this week, which could spur a market rally in the US.